Hello, I'm Mario Toneguzzi, managing editor of Canada's podcast, taking care of business today with Chris Alexander, who is president of Remax Canada. Thanks, Chris, for joining us today.
Oh, thanks so much for having me. Good to see you.
All right, good to see you as well. And we're going to talk about a recent report that Remax put out on the luxury housing market in the Greater Toronto Area. That report, Chris, to you, what was the most important thing that you took out of it?
The fourth quarter was astoundingly active. I mean, sales over 3 million on average were up over 40%, over 7 million, 40%, and sales over between 5 and 7 around 30%. So, um, very, very active in the fourth quarter.
Why?
Well, several factors, mainly the stock market's on fire. The TSX is up 30%. The Dow's up 18. S&P 500 over 30%. So that's number one. Number two, the big drop in interest rates in October and December is a whole percentage point. I mean, typically speaking, when you're in that ballpark of pricing, especially over 7 million, interest rates don't play as big of a
Yeah.
role, but it definitely gave buyers that a little extra motivation. And finally, they also had a lot of choice. So for so long, the upper end was constricted, very limited inventory. So over the last 3 years, you had a lot of pent-up demand. And also too, that segment of the market, the luxury homeowner, they usually have the means to weather any kind of storm. And it's no secret that Ontario real estate, and particularly Toronto, has been depressed up until the fall of last year. But all those things combined and a couple other external factors really push people to make their buying decisions.
So who are these buyers that are snapping up these high-end properties?
Well, a lot of them are the children of baby boomers, entrepreneurs, and people that have also been in the market for a long time and have built a lot of equity throughout the years. And so there's a lot of wealthy homeowners. Toronto is has the second greatest loan to value ratio behind Vancouver in all of Canada. And
Mhm.
so people in Toronto own more of their homes. It's also the 13th most affluent I forget what the exact stat was, but there was a study out of one of the universities in the UK, and Toronto ranks 13th on the global list of most affluent citizens per city. I think I
Oh,
got that right, but basically Toronto has a lot of wealthy people living
a
in
lot
it.
of rich people
And
in Toronto.
so, and so you couple all that together, and it shaped up to be a strong fourth quarter.
What happened to in 2024? What happened to prices in that market, in that luxury market in Toronto or
So that's
Toronto?
the other interesting thing is depending on the neighborhood, between 5 and 10% decrease,
Oh,
even with all that sales activity. Now, you're that decrease is off of 2022 to 23 peak value time, and so it's not. I just go back to the typical affluent homeowner. It's just a different type of person that owns those type of homes can buy in that bracket, and 5 to 10% on a multi-million dollar home is a big sum of money, but they seem to be able to manage through it even if it's at a loss.
yeah. And when you're looking at the GTA area, a couple of things in terms of where people are buying. First, yeah, location wise, is there any pockets or areas that are more popular for this kind of the luxury market?
Well, Rosedale, Forest Hill were the two winners. um, York Mills, Bridle Path, that's a whole other stratosphere typically from the average luxury neighborhood. But Rosedale, Forest Hill, Rosedale was the winner. Forest Hill in the close second. They are annually very strong luxury parts of the city. And the one part that was really depressed was condominiums. We only had one sale over 5 million.
Oh, yeah.
And so condos are continuing to be challenged.
All right, Chris, last question for you. What can we expect as we're into the new year, 2025? What can we expect from this luxury market in the Toronto area?
I think I think we're going to see a trickle up factor, call it. And that's because first time home buyers are going to be back in a big way this year. There's all kinds of new incentivization measures like 30-year amortization, higher insured mortgages, especially in the GTA where the average price is over $1 million. That extra 500,000 on an insured mortgage goes a long way. Easing the stress test. So your first time home buyers get in. That allows the move up buyer to transact, and then the second class of move up buyer to get into the luxury market. So I expect it to get healthier. We've got some economic headwinds ahead of us. Unemployment's still pretty high. Election looming. Potential tariffs with the U.S. or maybe even becoming American.
Mhm.
I don't think that's going to happen anytime soon, or probably ever. But
Yeah.
all of these things, they play a role in consumer confidence and lack thereof, and so there's still some trepidation. But don't forget, people have been sidelined for the better part of 3 years,
Hmm.
and that equals pent-up demand. We saw what happened with only 2 months of pent-up demand in the pandemic. Think about 3 years.
Yeah.
It's going to be a lot more gradual, but overall, I think we'll have a better, more active market this year. Prices aren't going to go crazy, but I do think they're going to improve in a very healthy manner. So that's my take.
All right. Thanks so much, Chris, for joining us today.
Thanks for having me, Mario. Take good care.
You too. That was Chris Alexander, president of Remax Canada. I'm Mario Toneguzzi, managing editor of Canada's podcast. Thanks for joining us today.